Hi, my name is Casey Gordon from Casey Gordon Financial Planning. And today I want to talk to you about the rising interest rates that we've been hearing a lot about in the news. As I mentioned before, one of my goals is to take really complicated topics and try to simplify them as best as I can. So what does the rising interest rates mean for you? Right? Now I'll give you a little bit of a backstory. So for many years, I'd say since maybe 2008, 2009 period, interest rates have been historically very, very low for a very, very long time. And so now with those interest rates being as low as they were, they have afforded us to do many things, including to have mortgage interest rates low, in the twos and threes and even in the fours, even though that's not as low, but going as low as under 2% at times. So people were able to buy homes for a very low interest rate on their mortgage. There's also a negative side to that. It means that money that you had sitting in the bank in cash has not earned you very much in return. And so as a result, a lot of people were taking a lot of risk or taking risk, which sent them to the stock market. So bonds weren't paying a lot because of course interest rates are tied to bonds, or bonds are tied to interest rates. And so what they did was, in lieu of owning bonds that was not paying out a lot and on their return on investment, end up in the stock market. So people were willing to take more risk because they wanted more reward. That's part of the reason for the stock market and how it had grown over time. So now with the rising interest rates, what does that mean? The federal government is trying to slow things down a little bit. There's inflation that's been caused as a result of the very low interest rates. People were able to buy lots of things and spend lots of money. And there was also a lot of money in the economy that people were just able to buy things. And so now the reverse of that is true if the government is able to slow things down. So consumers aren't able to spend as much in trying to bring down inflation, and also slowing down the hiring by companies. So what does that all mean for you? The economy could potentially go into recession, right? That means just a slower economy. How long will that last? No one knows. Will it actually going into recession? We don't know, but the indications are there that it's quite possible. But again, none of us know. Ultimately, as an investor, what does this mean for you? Keep your money invested in the markets. There's nothing that you can gain really by trying to time the market. And the stock market has been going down for the better part of the last 10 months or so. And I know it's especially during these hard times when it feels like it's never ending that you may be tempted to want to get out, but now's not the time to do so. It's also understanding what levels of risk you're willing to take in your portfolio. Um, because the markets were going up, were you too aggressive in your portfolio? And now that the markets are going down, you're faring much worse because you have most of your investments in stocks or stock-like investments. It's a time to check in to see what your allocation should be. And if it's been out of whack, to make sure that it's back in whack. Again, a professional can help you to determine some of these things. And with rising interest rates, potentially your money, you can see now that you have cash that might earn you some interest. I know it's been a long time since we've seen any kind of real interest rate on our cash, but when I looked this morning, some high yield savings were paying 2% or even above 2%. And again, if a recession were to come, it's important for you to have monies that you can use for your regular living expenses that is not subject to the fluctuations of the market. So making sure, almost like a bucket approach, having the amounts of money that you would need in the short term available, and then still allowing you to have long-term investments. So I know I said a whole lot in this, and if you have any questions, please do not hesitate to reach out and let me know. And I would welcome your feedback. Again, interest rates are going up, and it can, in the short term, be a negative thing, but in the long term can be a positive thing, because hopefully it will stem the flow of inflation and the rising costs of just about everything that we need. I thank you, and I look forward to speaking with you again. Again, it's Casey and Gordon at Casey Gordon Financial Planning. Thank you.